Hi, this is the Price Action Analyst YouTube channel. Welcome back. For those of you who are returning, just want to say before I do this video, if you like this video, please give it a thumbs up. Please subscribe to the channel if you want to be made aware of when I have new videos. And also, if you would like me to have a look at something in particular, just let me know in the comment section and I'll do my best to have a look at it. The trade I want to show you today is Conoco Phillips, COP. This is a trade I've been watching for a while. I might actually own the stock. It's very similar to the Citigroup trade that I've just made a couple of videos on. You've got the close of a gap here. You can see that as prices come up to this gap, you've got selling pressure. But because price never really went down, it kind of went along it. This, to me, was indicative of the fact that it was going to push higher, and it eventually did. You had another gap here, and then at this top pink line, you had a previous high, small one. So, given those gaps, that area there, plus the fact that price stepped out of the Bollinger Band, I was expecting to have a bit of selling pressure or retracement in price. So that's the 8 there. So the actual day that the price was outside of the Bollinger Band, I sold a $50 call option, which is indicated, the strike price is indicated by that white line. And I just want to show you that, yes, indeed, we did get 2 or 3 days of selling pressure. Now, the way I played that, normally I would have bought a naked put option or bought a put debit spread. In this particular instance, because I own the stock, I sold 3 call options. So I wouldn't normally sell a naked call option, because if you're wrong and price continues to rocket up, you're liable for that difference, and that's kind of a position I don't want to be in. So if you own the stock, worst case scenario, price rockets up, I have to sell the stock for $50, you know, when it's say 60 or whatever, and I'm prepared to live with that in the short term. So that's why I'm selling a call. I'm only really prepared to do that when I'm holding the stock. So this is a covered call trade. What I want to show here, though, is how much selling the call is in, or call trade option trading in general is in the favor of the seller. So I sold a call that day. I think price was around 50, maybe slightly higher. I sold the call for $2, and then I immediately put in an exit order to buy it back at $80. So when that order gets hit, when I buy it at $80, basically I'm locking in $120 profit out of the $200 that was initially sold. But what I want to show you here is how quickly that happens. Like this morning, I was already out of the trade. Let me just have a look and see, double check that it was today. Yeah, it was 10:30 a.m. today. So if I go into the intraday, chart, so this is the 8th here. Let's assume that, from loose memory, I sold the call option around here. So let's say I sold the call option for $2 here. Price went a little bit against me. It was down this day, and this morning at 10:30. Where are we? So one of these 2 bars here, and it's say 46.36. So price has gone from $50 down to 46.36. You know, these are 5-minute bars, so it looks like a long time. It's not. That was Monday. This is Wednesday, and so that call option's gone from $2 to $80. So if the other person that bought that call option, they've lost half their money, over half their money in 2 days. And I've locked in, I think that's about an 80% profit on that call option. So, you know, when you're buying call options, price, if it's not moving in your favor immediately, you're losing money, which is in the seller's favor. So I just wanted to show that, because when you're selling call options and you have the ability to identify areas where you're going to get selling or buying pressure, the trades move in your favor very quickly. So, I mean, if you zoom out, you can see from there to there, it doesn't have to move a long way for you to make money. And the trick is identifying where you're going to see that, where you're going to get a little bit of selling pressure. You know, you step outside the Bollinger Band here. It didn't quite touch the gap, but it's very close. You're outside, you buy the call here. So you can see, you know, if you can get that at 43, by the time you're at 37, 36, 37, you've replicated the trade that I just made. So these are reliable places to get short. But this one compared to this, I preferred this because now I'm well past the gaps. I'm pushing up into this previous high where there was a wick here. I'm outside the Bollinger Band. So, you know, nothing's certain, but that's a high probability trade. So yeah, just a quick video on that one. Again, if you like that or you want to see other things, please let me know in the comments. Like the video and subscribe. Thanks a lot.